Good morning everyone and welcome to the Moneycontrol live stream. I wish you a very happy Diwali. I hope you had a great Diwali. Santo, I hope you too also had a great Diwali.
Same.
Well, we have a lot of news flow to digest, a lot of stocks coming out with their earnings during the weekend, so a lot is there to process. But in the spotlight today, we are putting JSW Steel. The company came out with a very sobering set of Q2 numbers, Santo, and I know that you are waiting to beat me with that stick, given my bullish views on the stock in the past. But yeah, go ahead, take your shot.
Well, CJ, sobering would be an understatement, wouldn't it be? The numbers are very sharply off, and I think we're seeing a similar trend as was seen with the case of some of the cement companies as well, where the higher raw material costs were kind of factored in by analysts, but what the numbers that have actually come in have turned out to be far more weaker than what the street was expecting. Same is the case with JSW Steel as well. Now, the company seems to be getting hit by a double whammy at this point in time. On one hand, you have steel prices which have remained steady. From the export markets, again, demand seems to be softening, and while the local markets to some extent have made up for it, but on the overall picture is not very good. When you look at slightly lower realization, weak demand at the aggregate level, and high input costs, which doesn't seem to change in a hurry. So I would be pretty much bearish on JSW Steel at this point in time, CJ.
Well, Santo, I think yes, I take your point. Of course, margins were quite weak in the September quarter. Realizations, of course, sequentially also, and if you look at it on a year-on-year basis, also took a beating and were much lower than what market was working with. But I think it seems like this is the trough as far as margins and price realization is concerned for JSW Steel. I don't think it will get worse from here, especially with what the management indicated. They have indicated that prices will probably stabilize from here on, and going ahead, margins actually could see a little bit of improvement, given the fact that sequentially we have seen input costs, a lot of the input costs actually come down quite heavily. So I think at least as far as the margins are concerned, there could be a little bit of stability, going ahead in Q3 and Q4. But I think what would be heartening for the market, Santo, would be demand. If you look at volume growth on a year-on-year basis, what very strong, almost double-digit volume growth for the company. And there is a possibility, of course, that domestically also, with infra projects now coming up, the government will also step the pedal as far as infra projects are concerned. Steel demand could take a good bump up. Apart from that, there is a buzz among analysts that maybe come December, the government may start looking at reviewing that export duty that was imposed for steel companies, and if that goes away, I think you could start seeing a little bit of improvement in pricing, Santo.
Well, pretty underwhelming ratings there by brokerage house Nomura and Citi, and according to Nomura, the margin may improve from the third quarter, but steel prices are likely to remain under pressure, and Citi has trimmed its operating profit estimates for JSW Steel by 8% for this year and 5% for next year.
Well, Santo, I think the joker in the pack here for JSW Steel could be export demand, and specifically what happens to China. I mean, everybody, especially a lot of the metal companies, have been waiting to get the cues from China. Now that the political issue in China is out of the way, with the possible third term for the president right now, Xi Jinping, I think China will now focus on boosting economic growth going ahead. If you look at the Q3 GDP numbers, they were anyway very solid. I mean, compared to what market was working with, Q3 GDP grew at a year-on-year rate of about 3.3%. Of course, it's much slower than what we are used to as far as China is concerned. But I think going ahead, there are a lot of stimulus that might come in 2023. I think China could be the joker in the pack as far as steel demand is concerned and steel prices are concerned. And that is something that investors would like to watch out for going ahead. Well, Santo, I think, of course, we have given our thoughts, but if you guys have any thoughts on JSW Steel, you can always share it on the comment section and we will try to take it up on the show. Also, any questions that you have with respect to sectors, stocks, or any macroeconomic issues, you can use the hashtag AskMC and post your questions in the comment section below. Well, that said, let's quickly move on to the trade setup for today, Santo. And after a very strong Muhurat trading day, Santo, yesterday, it seems like we will probably be seeing a very muted session this morning. If you look at the SGX Nifty, it's indicating a flat to negative sort of a start for the benchmark indices. That despite the fact that, Wall Street, the handover for Wall Street, Santo, was very strong actually. Benchmark indices there rose nearly 1%. Overall, given the fact that this is, we have a truncated week, tomorrow is a holiday, of course, a trading holiday, and Thursday is expiry, I'm expecting that maybe the flat to negative start could turn into a positive day overall, because we could see some bit of short covering coming in towards the end of the session.
Well, also let's not forget, CJ, markets have been rising for almost 6 days on the trot.
Yeah.
So some bit of profit taking is only to be expected. Yes, I do take the point that there could be some bit of short covering ahead of expiry, but at the same time, I would think that traders would be a little wary of covering, taking on too much positions since it's a holiday tomorrow. So those kind of could keep the market in a narrow range today.
Yeah, absolutely. I think, Santo, the 17,900 level will be very crucial for the market, because that is where the tough resistance is. If we cannot break that ceiling wall, then it will be very, very difficult to, go towards 18,000, 18,200 next. And a lot of technical analysts are very, very eagerly or very keenly watching out if the index gives a close above the 17,900 level, and then we can probably start seeing some fresh short, long positions actually come into the market going ahead.
Well, long build up in futures of Delta Corp, Nestle and MCX, and there's been a short build up in futures of Z.
Well, Santo, the newsmakers, the next section on our show today, and in the newsmaker section today, I want to talk about a liquor company, Santo, the leader in the space, and this is one stock that you have also, spoken very well of in the past. United Spirits. Well, guys, the company came out with surprisingly good numbers despite all the challenges with respect to, cost inflation and a little bit of subdued demand that a lot of people were talking about. But if you look at the earnings, stock is likely to be probably one of the top gainers today, given the surprising earnings that we have seen. Q2 net profit more than doubled on a year-on-year basis, Santo, with top line growing in double digits, clearly indicating that there is very, very strong demand. I think more crucially, Santo, if you look at the prestige and above segment, which is basically high-end, liquor, there the volumes grew in excess of 13% on a year-on-year basis. But consequently, in the popular segment, which is of course your mass consumption segment, there the volume growth was only 2%, which basically dovetails with our point, the K-shaped recovery that we have seen in the economy. I think even the liquor market is sort of seeing a K-shaped recovery. And that said, the growth in prestige and above segment will actually bode well for margins, because this is really a premium product, high margin product, and therefore I think things are looking good for United Spirits.
Well, and RBL Bank, again, second quarter numbers have come way ahead of market expectations. There's been an improvement in loan growth as well as in the asset quality. Now, remember, this was the stock where the market had turned very negative when the new MD was announced. It was not somebody to the market's liking, but I think probably market may have got a little ahead of itself at this point in time. And now analysts say that they are actually impressed by the new MD's strategy of focusing on profitable growth and recovery of NPAs.
Well, our next section today is hot brokerage bets. And Santo, what is the hottest brokerage bet you have on your plate?
Well, First Home Finance by Kotak. Kotak Institutional Ratings has institutional equities has a buy rating on the stock and a target price of 1,000. The second quarter numbers have been pretty strong. Margins have been steady, and there's been a significant improvement in asset quality as well. Now, according to Kotak, branch expansion will drive the growth for First Home Finance across newer geographies, and besides, Kotak is also very bullish on the affordable housing space.
Well, Santo, my top brokerage bet today is Reliance Industries. Now, the report has come in from JP Morgan India, which has an overweight rating on a stock with a target price of about 3,065 rupees. Now, JP Morgan's views, I am largely going to focus, of course, on the demerger news, that mega news that has come in from RIL, where the company has said that they're going to demerge their financial service or Geo Financial Services and list it on the bourses. Now, as part of the scheme of arrangement, RIL shareholders will get one share each for one share that they hold in the company at this point of time. But JP Morgan believes that this demerger is a very, very positive event or update that has come in from RIL's house, given the fact that there is a lot of growth opportunity and leverage that Geo Financials can capitalize because of RIL's footprint in the retail and telecom space. Apart from that, JP Morgan believes that investors will welcome this news, although it may not be a precursor to the demerger of the consumer businesses, which is, of course, Geo Platforms and Reliance Retail, which everybody has been so eagerly waiting for the past couple of years. Why investors may welcome it, Santo? They believe that because of the high growth potential and of course the synergies that it gets from the retail business as well as digital business, and with already more than 20 million users at this point of time, or a customer base at this point of time, I think Geo Financial Services is being seen as a fintech play for RIL, and therefore I think that is where the optimism comes from. That said, JP Morgan believes that apart from that, the value of the non-energy business is also holding on, which is also very positive for the stock.
Well, markets have opened on a firm note. Nifty up 53 points in early trades, and we're seeing good breadth in overall. NSE about 1100 stocks are up, and less than 450 stocks are down at this point in time.
Yes, Santo, and I think the breadth is largely coming from the Nifty mid cap, and if I'm not wrong, the Nifty small cap index. I think if we can bring those charts up, clearly it's been a flattish start, but clearly a lot of the stocks right now in the green territory, and goes to show, of course, basically the mood of the market. We have seen, broad-based gains in the past 7 days, Santo. It has not been just limited to the benchmark indices or the broad market. It has been spread out quite evenly, and clearly financial services companies are the ones that are in demand at this point of time. If you look at the Nifty Bank Index chart, I think if we can bring that up on the screen, I think it's been another decent start for Nifty Bank Index after a very, very strong end yesterday during the motor trading session.
Well, and the first stock on our watch list this morning is ICICI Bank, which has hit a new high once again. Strong set of second quarter numbers from ICICI Bank. The loan book has grown about 23%, and the bank has also posted an expansion in its net interest margin. Across the board, the numbers have been quite good, and this has been the trend for the last couple of quarters now, which has led many analysts to be positive on the stock. In fact, now CJ, in market parlance, this seems to be turning out to be what we call a crowded trade. Just about
Absolutely.
Everybody is bullish on the stock at this point in time, which again is not a very good thing. If too many people are, yeah, it does happen. If too many people are bullish, after some time, when the story is well known, the stock stops performing, at least for the time. You need some bit of skepticism there. According to HSBC, the ICICI Bank has managed to grow its deposit base too, and that too in a tough environment. And according to Morgan Stanley, it's the consistency in earnings performance that will continue to drive the re-rating of the bank.
Well, Santo, a lot of people have been comparing ICICI Bank to HDFC Bank. If this is, they have taken over the mantle from them. But the rebel without a cause in me, I think, wants to go at this point of time, drift away from the current, as you said, because at this point of time, it just looks like that the stock is pricing in a very blue sky sort of a scenario for ICICI Bank, where nothing can go wrong, everything is going to go great. Of course, they have already reappointed Sanjay Bakshi, if I'm not wrong.
Extended his tenure by another 3 years.
They have extended his tenure by 3 years, of course, pending RBI approval. But I think what poses risk to ICICI Bank would be if we see any sort of deterioration in the macro environment. Of course, that is a broader risk to the entire banking sector. But I think in general, because of ICICI Bank's leadership, of course, the leaders will probably get hit the first. Apart from that, one concern would be the slowdown in deposit growth, Santo. I think deposit growth for the September quarter was probably at multi-quarter low of about 10 to 11%. So that is something of a little bit of a concern, given the fact that at this point of time, market seems to be favoring lenders which can mobilize deposit, because they know that there is a lot of demand for loans. And if you can mobilize deposit, which is a very cheap fund for any lender, then your cost of funding is generally very low. Unlike, somebody like a Kotak Mahindra Bank, which has had to hit the market so often, the past 6 to 7 months to raise funds, because the deposit growth has been lagging behind.
Well, I'm going to use the same argument against you for your next stock. Go ahead, CJ.
Well, Santo, the first stock on my radar and the last stock as well is from the banking space, but from the mid-cap banking space, and this is IDFC First Bank. Stellar sort of Q2 numbers. If you look at the Q2 numbers on a year-on-year basis, the core operating profit has jumped 81% for IDFC First. Loan growth was stellar, double-digit, more than 20% loan growth. And it looks like margins, if you look at NIMs as well, net interest margins were in excess of 6%, and the management is very, very confident that they can maintain at that level. So clearly that is another trigger for outperformance for IDFC Bank. Apart from that, Phillip Capital said that they believe that the bank could do well within the mid-cap space, at least could be among the leaders, because of the strong ability of the bank to garner deposits, Santo. And I think that is something that a market has also taken note of. If you look at the past 6 months performance for the stock. Apart from that, yes, you may say that IDFC Bank has had a very, very strong returns over the past 1 year. But Santo, the view in the market is that if return ratios of the lender keep on improving, especially in terms of return on asset and return on equity, then the re-rating drive that we are currently seeing will continue going ahead.
Well, IDFC First seems to be in a sweet spot at this point in time, and the stock has managed to make a good comeback. The market reaction to the first quarter numbers were pretty disappointing, but since then IDFC First has.
I think some bit of profit booking was expected, given that we had run up so much, in the run up to the earnings.
No, more than that, CJ, I think the challenge for banks like IDFC First will also be how well it's able to mobilize its deposits. Because when I see some bank advertising very heavily for deposits, you know that probably it's not getting enough of that, and you often see IDFC First very heavily. I mean, their ads almost seem to stand out.
Absolutely. But I think Santo, that marketing, just aggressive marketing push has also been beneficial in terms of the sort of number, deposit growth that the company has been able to see. I mean, we have seen a double-digit sort of growth in deposits for IDFC First Bank, and clearly, IDFC First last year came into headlines when they brought out their credit card product. If you remember, they were offering the sort of lower interest rates that have never been offered before in the banking industry. Nobody had even thought of such a product idea. So I think clearly there is a lot of innovation happening, a lot of financial innovation happening at IDFC First, and I think the aggressive marketing is what will help the lender garner deposits going ahead.
Well, last stock on a watch list this morning is SBI Life. Now, good set of second quarter numbers from SBI Life there. The value of new business margin has come in at a strong 31% for the first half of the financial year, and while its annualized premium equivalent, the growth in annualized premium equivalent for second quarter was slightly muted. That also has to do with a unusually strong second quarter during the same period last year. And according to MK, which is quite bullish on the stock, new distribution partners are showing good growth. Already it has got a strong channel in the form of State Bank of India, and the management has guided for 20% growth in annualized premium equivalent for this year, and margins for its value of new business at between 28 to 31%. MK is bullish on SBI Life with a revised price target of 1,675. Earlier it was it had put a target of 1,710 rupees.
Well, Santo, I think clearly SBI Life is one of those names in the life insurance space that has clearly been doing quite well, and the second quarter numbers goes to show why it is enjoying the sort of premium valuations that it is enjoying within the life insurance space. At least at this point of time, it is enjoying a price to enterprise value of in excess of around 3.5 to 4 times, which is almost matching that of HDFC Life at this point of time, and is at a premium to companies like ICICI Prudential Life, Max Life, and Life Insurance Corporation of India. That's the Santo. I think a lot of our viewers have a few questions for us, and one of the first questions that has come in is from Karthikeyan V, who want to know, what are our thoughts on Marathon Alloys. He's saying it's a low PE, high return on capital employed stock with a price to book value of about 1.2 times at this point of time, and would it be a good time to buy if the holding period is 2 to 3 years?
Well, Karthikeyan, as always, we do not recommend stocks, but a quick reading of the price chart of Marathon. Now, you've seen with most of these, generally with stock, before the earnings peak, the stock price starts to come off, and I think this chart is also showing somewhat of a similar pattern where the company's earnings are growing consistently, but at the same time the stock price has not been performing for quite some time now. That it touched a high of 1,500 rupees and now it's down to about 1,000 rupees. So, and if you also look at the trading volumes, it has fallen off very sharply. There is very little interest here. Now, the stock is again not a favorite with institutional investors. So, a lot of the activity you would have seen around that time would have come from domestic investors who seem to have lost interest in the stock for the time being. And yes, I do agree the PE is quite low. At less than 3 times trailing 12 months average, the P is fairly low, but it's the forward earnings that the market always looks for, and at least the price action at this point in time seems to suggest that market is not very convinced that, or the market seems to think that probably the earnings may have peaked out for the time being.
But Santo, I think if you look at it from a fundamental point of view, clearly manganese alloy is something that is largely used in the steel industry, in the stainless steel industry, where of course the key here would be how demand trends evolve going ahead, whether we see a pickup in stainless steel demand or steel demand in general in the second half of FY23 and probably in FY24. See, if in a country where there is so much optimism for a new capex cycle, a new residential property capex cycle, I think steel demand will hold up well. You can see that in the sort of capex plan and the enthusiasm that a lot of companies, steel manufacturers themselves are exhibiting at this point of time. So clearly, as far as demand is concerned, it looks like things are still quite stable out there. But if you look at it from a technical point of view, even in the long term, on a monthly technical indicators, the stock is currently exhibiting a lot of weakness in terms of being below its 50-day as well as its 200-day moving average. So at this point of time, maybe it could be in a accumulating zone, it could be, in a consolidation phase, but at least as far as the overall industry outlook looks, it looks like it is still in a decent place.
Quick point, the accumulation thing doesn't seem to be playing out for the time being.
Yes,
at least looking by the volumes have been continuously declining.
Yeah. Well, Santo, I think we should wrap up then.
Yes, well, with that, it's a wrap on this edition of Markets with Santo and CJ. I hope you enjoyed the show. Please do let us know about your feedback in the comment section below.
And as usual, guys, you can follow us on the social media links that you can see at the bottom of your screen. And you know the place to be for rest of your financial news. That is moneycontrol.com. And you can also download the Moneycontrol app. We'll catch you live again at 3 p.m. with all the day's trading action. Till then, have a great trading day.